than $700 million of crypto wrecked within 24 hours. Why is this market suddenly dumping after such a strong bounce? We need to break down the new economic data which has caused this market to dump and wiped out almost $1 billion in less than 24 hours. Could Bitcoin be revisiting 90k, 85k? We need to break that down and a lot more. If you like this type of content, smash up the likes. Do not forget to subscribe. Now, first and foremost, we need to cover off this fact, this number just above my head, close to $700 million wrecked within the last 24 hours. Now, what's interesting about this move is that Bitcoin on the previous day, right? If we go back to Monday, we had a really strong 4% candle. And then yesterday, we were having a good candle too, right? When I posted my video here on Dubai time, we're having a good candle. But then boom, the JOLTS figure came out, the ISM figure came out, and this market panicked. It panicked hard. Now, what's particularly interesting about this move is that the data which led this move to the downside is not typically deemed high impact market moving data. But in order to understand why this market is overreacting, or we'll talk about whether it is overreacting to this data, why it's moving so powerfully to this data, we need to understand the context. And the context dates back to that rug pull from Jerome Powell at the last Fed meeting at the end of last year. At the end of last year, Jerome Powell delivered his Fed meeting, and if you remember, we dumped hard on that day, because on that day the Fed officials had said, look, the economy was doing too good. The economy was doing too good, and for that reason, he's going to have to keep rates higher for longer. In other words, because the economy was doing so well, he took off some of the rate cuts which were supposed to be planned for this year, for 2025. And so the market had just had to price in 2, which is what the Fed told them. We're probably going to get 2 rate cuts this year. Now, that was fine. But what the markets had secretly, what investors had secretly hoped in the back of their mind, was that certain data points between now and the next meeting and throughout the first quarter of this year would start to show that maybe Jerome Powell was wrong. Maybe the economy is not as healthy as you thought. Maybe we could see not as hot economic data, and that could bring back some more rate cuts on the table. Maybe we could have an extra surprise rate cut getting us to 3 or 4 this year, and that would still, add good flames to the crypto market. Instead, the opposite has just happened, and that is why we're getting a big, powerful dump. And that dump wasn't just contained to yesterday. 5.2% down yesterday, and already opening down today another 1.5%. Bitcoin was yesterday knocking on the door of 102.5, and now we're already back down to 95. A big swing to the downside. So let's get into the data. The data that actually came out, the first bit of data was the JOLTS figure. The JOLTS figure tells you how many job openings there are for November. It was expected to come in at 7.7. Last month was 7.8. So the economists had predicted it to go down a little bit. Not only did it go up, but it surpassed even the previous month by quite a mile. 8.1 million job openings, showing that the economy is healthy, right? Employers want to recruit. And again, we're in a period where good economic news is bad news for this market, right? We're like Goldilocks. We don't want it too bad. We don't want horrible economic news because then, recession. But we don't want good economic news like this because, we're not going to get rate cuts. Okay, really important that we understand this, because the fact of the matter is the majority of this money getting liquidated, the 700 million which has got liquidated in crypto over the last 24 hours, they don't know about what we're going through. They don't understand JOLTS. They don't follow the economy that detail. They're not looking at the bond yields. They're not looking at the dollar index. They're kind of just FOMOing in, right, into their meme coins, into their favorite coins. I mean, look at this. 1.17 million on just the last hour has been on 1,000 bonk, right? So people are getting liquidated without actually having knowledge of what's going on. If we look at that, 25 million just got liquidated in Doge, right? And you can see the big contributing factor over the last 24 hours is other coins. It's not Bitcoin and Ethereum, it's others as well. So it's all the meme coins, all the altcoins that people are aping into. Those are the ones that are getting wrecked as well, because people are not following the economic data. So as boring as it may be at times, I need to share this with you. By the way, guys, please do help us reach 20,000 subscribers. That's our next goal. We're sitting here at around 18,600. Do hit up the subscribe button. Also, take part in the poll just below here. Will we revisit 90k on Bitcoin? Put it in the comments below. Let me know, do you think we're going to hit 90k? Also, if you want to trade with me We're trading in the Telegram group. You can see that in the ticker below there, ijazcrypto.com/TG. It's the very first link in the description. Okay, so the next bit of data which came out, which didn't help us as well, was the ISM Services Purchasing Managers Index. Sounds like a bit of a mouthful. In other words, it tells you how healthy is the service sector in the US part of the economy. Expectations 53.3. Came in at 54.1 and ahead of the November's 52.1. So this just showed further positive news, which again, market does not want the positive news, just showing that the service economy in the US is healthier than markets anticipated. You then had the prices paid sum index came in red hot at 64.4 compared to the expected 57.5, and it was 58.2. So super hot prices paid index, showing that consumers are paying high prices and this economy continues to move in that direction. Now, all of that resulted in the US 10-year spiking. We saw that kind of reach up to the 4.679 mark at the time of recording this video, which is showing that risk is rotating off, right? If we jump on over to the dollar index, we can also get a quick view on what's going on here. If it wants to load, there you go. So you see the dollar index just showing more strength in this upward trend. So we need to monitor this, because the fact of the matter is this could stoke flames for crypto. Crypto does want the narrative of more rate cuts, right? And you can already see that this market, if we jump onto the Fed rate monitor tool, has not priced in a rate cut for January. If you go down further, you can see majority of the market is not pricing it in for March either. So by the time you get to the March FOMC meeting, which is the second one of this year, Q1 is pretty much all but in the books at that point, and yet 60% of the market thinks we're not going to get a rate cut by that point. And then it's not really, and even then, if you go into the May meeting, the majority are still not expecting a rate cut. And so if you look at June, that's when the majority comes for a rate cut. So the way the market's pricing this in is pretty much putting one in June at the moment. But again, this is going to be the narrative. If you're trading this market right now, I said this after the Fed meeting at the end of last year, I said, guys, this is going to be the narrative. These economic bits of data are going to create the swings. So if you're in a trade and you're sitting there, oh no, crypto's looking great, and then boom, ISM smacks you out the face. You're like, what? Why did I dump? I was in a beautiful trade there. I mean, the technical pattern was perfect. And no, if you're not following the economic data, you're going to walk into a bad 5% day on Bitcoin like that. And when that happens, like I just shared with you, that's $700 million being wrecked in the market, and it'll mess up your trades. It'll hit your stop loss. You'll get liquidated. So it's very important that in this market right now, you're paying attention to these small bits of data. I know that a lot of you will start to pay attention to CPI. I think that's a very common one people look at. PCE, inflation, fine, even your non-farm payrolls. But what yesterday has proven is it's even the other bits of data, right? It's earning calls. It's listening to the retail sales. It's listening to ISM. It's listening to even some of the, the surveys you get, right? When you have the Michigan surveys and things like that. We need to be in tune with the economy, because this market is reacting to how well the economy is doing in the US, and it doesn't want it to do too well. So it's important you understand that narrative, because it's going to affect your crypto investments. If you find this type of video useful, which is explaining what's going on in the market, then please don't forget to smash up the likes and subscribe. Remember, we want to get to 20k by the end of January. If you can help us do that, that would be greatly appreciated. All coins also tumbling here as you'd expect. I mean, we've got Ethereum down 2%. You can see Solana down 3.7%. Interestingly, OM isn't down as much, down 1%. If you've not looked at my video on OM, go check that out. It's a big play in the real world asset space, which BlackRock deems to be a multi-trillion-dollar space going forward. Phantom falling 5%. Again, go watch my video on Phantom to understand what the pain is going on here. But again, you're getting lower lows now. The price are falling lower than the 1st of January. So now really support sits on Phantom around that 56 cents mark. Cardano falling 2.5%, even though it's moving decently a couple of days ago. Polygon down 3 yeah, it's just pain across the market, liquidations everywhere. And that's what happens, right? Bit of economic data comes out, market panics, liquidations get cascaded, and then it keeps going. It triggers the next set of liquidations, triggers the next set of liquidations, which is why it's so important that in this volatile type of market, which I've just explained, is going to overreact and react a lot to economic data. You really do try to exit your leverage, guys. Your leverage is going to get you wrecked. I'm holding spot. I'm trying to buy the dip when I get opportunities to buy the dip, and then holding spot allows me to hold my nerve, not to have a liquidation price, to sit there patiently and go, you know what? It's fine. I'm not going to panic sell. If we get lower prices, I'm going to add on the dip, because ultimately when things are exciting again, maybe closer to the inauguration, then we'll be attacking some of these numbers again. So if you want to know how I think the inauguration is going to affect the markets, make sure you go watch my video from yesterday where I explain what I think is going to happen during the inauguration and I share some warnings. Thanks for watching, guys, and I'll see you in the next one.